$16 billion. That's the pile of cash China dumped into Venezuela between 2000 and 2023. Loans, building projects, oil agreements, joint business deals, all of it vanished. And here's the scary part. This exact playbook has been crushing empires for the past 200 years. Not just similar, identical, 4 phases, every single time. As reliable as your morning alarm. January 3rd, 2026. U.S. Delta Force grabs Venezuelan President Nicolas Maduro, just hours after he'd been sitting down with Xi Jinping's special representative. Hours. That timing isn't random luck. It's strategic domination, and China just got schooled the same way Britain did in 1825, the same way France did in 1890. It's the lesson every up-and-coming superpower eventually learns when they try to play power games in someone else's neighborhood. Right now, Venezuela's tab with China sits somewhere between $10 and $19 billion, but that's just what's left on the books. The total damage? Over $100 billion. China Development Bank alone threw $60 billion at oil-backed loan schemes. And what's China got to show for all that? Oil deliveries at 40% below what everyone else pays. Joint business ventures about to get seized by the new government. Infrastructure they built now falling into American corporate hands. Want to know the really brutal part? This whole mess was totally preventable. You could see it coming from a mile away. This pattern's been playing out for centuries, and China marched right into it, fully aware, absolutely convinced they were the exception, convinced their system worked better, convinced this time the story would end differently. It never does. Let me walk you through exactly how empires lose their shirts, the 4-phase pattern that never fails, the cycle that's currently torching China's Belt and Road ambitions, and why you need to wrap your head around this before the next country goes down. Because Pakistan's paying attention, Kenya's watching closely, Ecuador's taking notes, and they're all figuring out the same thing. You can walk away from Chinese debt without any real blowback, without anyone actually cracking down, without any price except some angry press releases from Beijing. The pattern's rock solid, the ending's guaranteed, and it's unfolding right now, exactly like clockwork. Pay attention. Here's what you've got to grasp. This isn't some theory I'm spinning. This isn't guesswork. This is mathematical certainty. 4 phases. Every empire, every borrower, every single instance over 200 years. Phase 1. The lender's fantasy. A rising superpower spots an opening. Resource-loaded country. Politically shaky. Locked out of Western money. Desperate for funding. The rising power swoops in. Not for quick profits, but for strategy. For political positioning. For resources they desperately need. They hand over massive loans, billions, backed by future commodity shipments, oil, copper, mining access. They think they've covered their bases. After all, they're not just throwing around cash, they're locking in guaranteed future resources. Looks genius, feels like checkmate. Everyone's celebrating the strategic alliance. But here's what they're blind to. The borrower isn't taking this money to build anything sustainable. They're grabbing it to survive, to cling to power, to put off the inevitable collapse. They'll promise the moon, sign whatever you want, agree to anything. Because what choice do they have? And the lender? They're so fixated on the strategic victory that they completely ignore the economic reality, ignore whether the country can actually produce anything, ignore the dysfunction in government, ignore everything except the story they want to believe. China looked at Venezuela and saw the planet's biggest oil reserves. 303 billion barrels, 17% of the world's total, more than Saudi Arabia. They saw decades of guaranteed energy, a foothold right in America's backyard, a direct challenge to US dominance. They saw everything except what actually mattered. Venezuela couldn't run its oil industry, couldn't keep infrastructure working, couldn't manage a functioning economy. None of that registered in Beijing. The strategic opportunity was just too juicy. That's phase 1, the delusion that kicks everything off. Phase 2, the expansion trap. Now the money really starts flowing. First loan goes out, then a second, then a third. Billions pouring in, construction projects kicking off, joint ventures launching, production targets getting established. Everyone's optimistic. This is working. This is the future. Except production never hits those targets. Never. The infrastructure doesn't deliver. The government doesn't get its act together. The economy doesn't stabilize. And here's where the trap snaps shut. The lender can't stop the money flow because stopping would mean admitting the first loans are worthless. that the strategic play failed, that billions are gone forever. So they double down, they restructure, they stretch out payment schedules, they slash interest rates, they pile new loans on top of old ones. They call it strengthening the partnership, or showing commitment, or strategic patience. It's actually just damage control, throwing good money after bad, desperately hoping anything changes. Venezuela got its first Chinese loan in 2006, $2 billion, then 2007 brought $7 billion, 2009, another $8 billion. By 2010, they were sitting on $27 billion total. China kept lending because Venezuela kept failing, production dropping, economy imploding, government spending spinning out of control. Every problem should have been a giant red flag. Instead, it became justification for more funding, because China was already in way too deep. See the trap? Once you're in, there's no clean exit. The only way is deeper, hoping against all logic that something will shift. It never does. That's phase 2, the point where you can't turn back. Phase 4, the inevitable theft. This is always how it ends. The borrower collapses completely, or gets overthrown, or gets invaded, or defaults outright. A new power steps in, usually the regional hegemon. They restructure everything. New government, new terms, new deals. And the original lender, they get nothing or pennies on the dollar. Or worse, they get blamed for the crisis they tried to prevent. Their predatory lending, their debt-trap diplomacy, their exploitation. It's all headlines now. The hegemon takes the assets, the infrastructure, the resources, everything the lender built, everything they paid for. And the lender? They write angry statements. They protest at the UN. They demand international law be respected. They do everything except what actually matters. They don't enforce collection. They don't use military power. They don't do anything except accept the loss and move on. January 2026. The US captures Maduro. Within days, Trump announces American oil companies will take over Venezuelan oil production, spend billions fixing infrastructure, make money for the country. Chevron already has permits, already operating, getting exemptions, while Chinese companies get slapped with sanctions. The positioning is crystal clear, the outcome certain. China's $100 billion in infrastructure investments, subject to renegotiation under the new government. Their oil for loan agreements dead. Their joint ventures in the Orinoco Belt up for grabs. Their strategic foothold in Latin America evaporating. So what'll they do about it? File arbitration claims, demand treaty protections, write strongly worded statements. Nothing that actually recovers the money. That's phase 4. The theft, the transfer, the completion of the pattern. Now let me prove this pattern is real. 3 historical examples. Same 4 phases, same inevitable outcome, different centuries, different empires, identical results. Picture this, 1822. Britain just beat Napoleon. They're the undisputed financial superpower. London's drowning in capital. Investors are hunting returns. And along comes Latin America, freshly independent from Spain. Massive natural resources, unlimited potential. The investment fever is absolute madness. Between 1822 and 1825, British investors pour £20 million into Latin American government bonds. That's nearly £2 billion in today's money. Colombia gets $6.75 million. Peru gets $1.8 million. Chile, Mexico, Brazil, everyone's getting funded. The London Stock Exchange is on fire. Mining companies forming overnight. Bond prices soaring. This is the future. This is where fortunes get made. Phase 1 complete. The creditor's delusion is in full swing. The expansion kicks into overdrive. Not just government bonds anymore, private mining ventures, railway schemes, infrastructure projects, British capital flooding South America. Returns look spectacular on paper. Everyone's getting rich on paper, but production isn't meeting projections. The mines aren't producing. Infrastructure isn't getting built. Political instability is constant. Civil wars, coups, revolutions. The borrowers keep asking for extensions, keep restructuring terms, keep promising the turnaround is coming. Britain keeps lending. Why? Because they're already in too deep. Because stopping means admitting failure. Because surely this is temporary. Surely things will stabilize. Surely the resources will start flowing. They never do. Phase 2, the expansion trap has closed. Then, 1825 detonates. The London financial crisis erupts. Banking panic spreads across Europe. The speculative bubble bursts. Suddenly everyone's demanding their money back, and the Latin American borrowers can't pay. Gran Colombia defaults. then Peru, Mexico, Chile. Eventually, every single major Latin American borrower except Brazil defaults. Default rate exceeds 68%. Investor losses range from 44% to 86%, depending on which country you backed. Colombia doesn't resolve its debt until 1845. 20 years later, Peru takes until 1849. Some investors never recover anything. British investors lose roughly 15 to 18 million pounds, 75% to 90% of their investment. Gone, vanished. The strategic investment in Latin America's future. Total catastrophe. Phase 3 complete. The breaking point arrived exactly as predicted, but watch Phase 4. The defaults get restructured, eventually at pennies on the pound. And who fills the vacuum? Other European powers. France, Germany, later the United States. They come in with new deals, new terms, new control. The British investors who funded independence are left holding worthless bonds. Their strategic investment becomes someone else's opportunity. The empire that ruled the seas couldn't enforce repayment without wars they couldn't afford. The pattern held perfectly. Stages 1 through 4, exactly as described. 100% loss, zero enforcement, complete transfer of assets to the next power. Fast forward, it's now the 1880s. Different century, different players. Watch the pattern repeat. Britain's still the dominant financial power, but now they're more sophisticated, more careful. They learned from the 1820s disasters, right? This time they're investing in serious countries, real economies. Places like Argentina. Argentina in the 1880s is booming. Railways, ports, agriculture, the Paris of South America. British investors can't get enough. Between 1880 and 1889, Britain pours 150 million pounds into Argentine investments. Government bonds, railway companies, utility companies, everything. The prestigious Baring Brothers Bank leads the charge. They're underwriting massive bond issues, investing their own capital. This is the safest bet in emerging markets. Everyone knows it. The risk spreads are tiny, 300 to 500 basis points above British government bonds. Nothing for an emerging market. Argentina is solid. Phase 1, the creditor's delusion returns. Different country, same pattern.